On May 15, 2023, an update was executed on the core financial software platform used by a consortium of banks, payment processors, and regulatory agencies known as FinSecure Network. This consortium had facilitated the exchange of transactions ranging from personal banking to governmental fund transfers. Their software platform was critical for ensuring secure operations, and its functionality was relied upon by over 500 financial institutions across the United States and abroad. As part of its standard operating procedure, FinSecure Network initiated a software update intended to improve system reliability and enhance user interface capabilities. However, the update process revealed a crucial oversight within their software development lifecycle. The new code inadvertently bypassed several important security measures only because the configuration was not thoroughly reviewed post-deployment. An internal review had been scheduled, but was delayed due to overlapping obligations among the teams. The decision to proceed without completing these steps became the first technical failure in a chain of events that would culminate in significant repercussions. Approximately 3 days after the implementation of the update, vulnerabilities began to surface in the form of anomalous user access logs. An incorrectly set permission level allowed unauthorized access to segments of the network previously secured by multiple layers of authentication. Specifically, a large number of users were granted expanded access to sensitive transaction files, creating what is known as a privilege escalation in cybersecurity terms. The failure manifested as a misconfiguration in the access control settings, enabling hackers to exploit this environment. The measurable impact of this oversight began to emerge within the first week. Reports indicated a surge in irregular financial activities, with approximately $12 million worth of unauthorized fund transfers across different accounts. Affected institutions began encountering latency and failures in processing transactions, leading to disrupted services for clients who relied on the platform for daily operations. Initial attempts to quantify user impact showed that roughly 25% of transactions were delayed, affecting nearly 100,000 end users. This disruption triggered alarm bells among financial authorities and the corporate users of the platform alike. Inside FinSecure Network, confusion quickly spread. Internal emails circulated among various departments, with team members scrambling to identify the problem. An emergency meeting was convened within hours of the initial alerts to examine the situation. However, with the fundamental issue still unclear, miscommunication proliferated. Some teams mistakenly assumed that the disruptions were isolated incidents, while others feared a broader cybersecurity attack. The incident response channel was flooded with partial fixes and conflicting information, leading to further delays in resolution. Externally, user reports began flooding in, with clients expressing concerns over transaction failures through social media, which quickly caught the attention of monitoring systems. Initial minor mentions in media outlets highlighted the vague nature of the complaints, categorizing them as inconvenient service disruptions rather than severe breaches. However, as reports continued to build, several technology blogs started drawing connections between the update and the transaction issues, prompting inquiries into the patch history of the software. As investigations began to widen, customer confidence began to wane rapidly. Financial analysts and industry experts began discussing the potential ripple effects this could cause throughout the financial sector. Alerts from monitoring tools indicated not just failure rates, but also the erratic behaviors of some users' accounts, leading to an unprecedented spike in suspicious activity. This triggered discussions among higher management regarding the necessity of engaging third-party cybersecurity firms to conduct independent assessments of the situation. The initial oversight and its immediate fallout signaled the beginning of a systemic failure. As the days progressed, newly identified vulnerabilities continued to expose critical financial data. A cascade of reactions flared up across both internal and external communications, compounding the difficulty of controlling the narrative and the situation itself. Secure Network's leaders found themselves at a crossroads, grappling with the dire implications of their next steps. The organizational chaos underscored the fragility of digital infrastructures underpinning the sector, while precluding any quick resolutions to the very real problems at hand. By the end of May 2023, the internal crisis had escalated into larger external pressures as industry stakeholders called for transparency and accountability. Trust appeared to be rapidly eroding, prompting regulatory bodies to seek clarification on Secure Network's incident response protocols. The mounting scrutiny created an intense environment in which decisions would have long-lasting implications for the consortium and its clients alike. The complexities surrounding the incident were further intensified by an emerging investigation into the update process itself and the subsequent vulnerabilities exploited by malicious actors. As experts delved deeper to understand the sequence of events, an underlying reality became starkly evident. A software update designed to enhance functionality inadvertently opened the door to a major cybersecurity threat, one that would not be easily contained. The story, marked by an overlooked vulnerability, a misconfiguration, and subsequent chaos, had just begun to unfold as the ramifications rippled through the financial systems and beyond. On June 1st, 2023, as pressure mounted from regulatory agencies and public demand for transparency increased, Secure Network reluctantly issued an official statement acknowledging the operational failures. They confirmed an extensive investigation was underway and assured users that third-party cybersecurity experts had been engaged to assess the extent of the breaches. However, the language used in the initial communication was vague, referencing, quote, zero, without directly addressing the exploited vulnerabilities, leading to further widespread skepticism among users and investors alike. By mid-June, data analysis revealed that nearly 500,000 accounts had been affected in varying degrees, with substantial amounts of personal financial data compromised. The exposed information included names, addresses, and, in some cases, social security numbers. Tensions escalated when external cybersecurity firms substantiated claims that the update had opened unanticipated backdoors in the architecture, allowing malicious actors to siphon information and execute unauthorized transactions with little resistance. On June 15th, regulatory bodies initiated formal inquiries, with subpoenas requesting documentation related to the software update and incident response communication. Meanwhile, several high-profile consumers, including large corporations and government entities whose services had been interrupted, began considering legal action against Secure Network. Talks of potential class action lawsuits were widely reported, generating waves of anxiety regarding financial repercussions for the organization. In response to the rising tide of dissatisfaction, Secure launched an aggressive public relations campaign aimed at regaining client trust. They implemented extensive audits to identify any remaining vulnerabilities and promised revisited cybersecurity training for employees. Despite these measures, insiders disclosed chat logs among senior executives, showcasing concerns about liability and the lack of preparedness to handle such a widespread breach. The conversations, which found their way into various news articles in late June, painted a picture of a leadership team ill-equipped for the scale of the crisis. Simultaneously, some users reported irregular activities related to their accounts, which resulted in escalating instances of fraud. As cases of unauthorized transactions climbed, FinSecure's customer support struggled to keep up. Response times increased to over 24 hours, and many users faced restricted access to their accounts due to ongoing investigations. The slowdown in service and emerging fraud cases exacerbated the existing distrust and prompted more users to consider moving to competing platforms. By July, foundational investigative work revealed that negligence during the update process had been a theme throughout the operational hierarchy. Analysts pointed to failures in quality assurance, lack of redundancy checks on code being deployed, and oversight provisions that had not been properly instituted. These investigations fed a growing momentum for regulatory action. In response to the findings, the Financial Oversight Authority announced intentions to impose fines and other penalties against FinSecure Network for failure to protect sensitive data adequately. The cascading effects of the incident led to a near-total collapse in FinSecure's stock price, which plummeted by more than 70% from its pre-incident valuation. With financial forecasts spiraling downwards and cash reserves dwindling, the organization sought urgent funding through private investors and government loans. Negotiations ensued, but potential investors grew wary as public sentiment soured, and the legal liabilities facing the company continued to mount. By August, social media platforms were rife with escalating frustration regarding ongoing service disruptions. The mood was further darkened by news that the company faced multiple lawsuits from former employees alleging inadequate crisis management and an environment of fear surrounding the fallout. Internal reports from July showcased attempts to shift blame onto the software vendor, which faced its own scrutiny amid claims of negligence leading to the botched update. As the months wore on, and with continued investigations revealing deeper systemic flaws within the company's operational practices, FinSecure announced on September 15, 2023, its intention to file for Chapter 11 bankruptcy protection. This dramatic decision followed weeks of failed negotiations for emergency funding and marked a critical juncture in the organization's trajectory. It evidently signified both the financial collapse of a once stable tech giant and the irreversible loss of public trust. In the aftermath, discussions surrounding regulatory reforms were ignited as stakeholders called for a reevaluation of security protocols in the financial sector, urging for stricter compliance measures to safeguard against similar vulnerabilities. Moreover, news cycles shifted focus, examining broader implications for the user experience across digital finance platforms amid a growing sense of urgency for change. Legal processes unfolded over the following months as the bankruptcy proceedings advanced. When the evidence presented led to further investigations, it became clearer that not just the update, but a culture of negligence and mismanagement had allowed the situation to loom unresolved for far too long. By December 2023, a settlement plan had been drafted, but significant credit losses and damaged reputations meant many affiliated firms ultimately faced their financial instability. As the curtains drew on this case, public records revealed the consequences of the breach for FinSecure Network. With the company effectively shuttered, its data centers dismantled, and operational future severed, the financial ecosystem sought to fortify itself against the past by implementing more rigorous regulatory frameworks to prevent a repeat of such a failure. By early 2024, The entire incident served as a case study among both corporations and watchdog institutions about the critical importance of proactive measures in an inherently fragile digital landscape. Final status as of January 15, 2024. FinSecure Network remains in bankruptcy with liquidated assets and dissolved operations following a major cybersecurity crisis, leading to systemic failures, impacting numerous users and stakeholders across various sectors.